Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to CEO Mark Smithson of Marks Electrical, a leading UK retailer of all things domestic appliance like cookers, fridges, freezers, and televisions. So welcome, Mark.
Thanks, Paul. You got it right this time.
Yeah, well, you certainly got it right in Q4. I mean, absolutely terrific trading update this morning with like-for-like sales at 19%, bang in line with analyst expectations. So really well done there. But before we sort of start digging into the details, I don't suppose you could give us a quick sort of like bird's eye view of what Marks Electrical's seeing with the health of the UK consumer. What's the sort of like the landscape and the sort of activity at the coalface?
Yeah, well, the consumers, getting savvier. They do a lot more research online now. We really have. Hang on a minute, sorry, I've got something coming up on the right-hand side. Apologies. So yeah, getting a lot savvier. They're looking at more premium products, which is the sector we particularly play in. They do a lot more research. Money's tight, so people, they want to spend the money wisely. We've brought in a lot of interest-free offerings and these pay-as-you-go Klarna. In fact, Klarna starts next week. We've got ClearPay as well. Today we've got a couple, and we've seen a lot of activity there. People like to spread the payments, 4 equal payments or interest-free. We do, 12 months interest-free on a lot of products, and we were really poor at that before, Paul. I used to do it, but until we got Josh on board, the CFO, he's really dug into it, got some great rates, so we can, offer interest-free on a lot of products for our consumer.
Good. Can you just sort of also talk through what the strategic rationale is of sort of focusing on the sort of premium end of the market? So rather than your commodity cookers, you've got sort of like your top end brands and stuff like. What's the sort of the logic?
Well, people are more likely to recommend you, aren't they? If you buy a nice product off someone, you'll recommend that retailer, and you enjoy using the product and you rave about the product. Say you've got a nice Rangemaster cooker, for example. Rather than buying a cheap Chinese brand, you rave about, you might have your friends around for dinner, cooking a nice meal, and they can see the benefits of a quality product. So you've spent more on it, you might have bought it on interest-free or whatever, but, it's far more beneficial selling top-end premium product. It's more reliable.
Yeah, you get less returns, I guess, don't you?
Returns, it's easier to install. So all in all, it's just far better. And of course, you get the benefit of having a lot higher value on each vehicle. We don't want to fill our vehicles full of cheap product. We want expensive product.
And that sort of justifies the that sort of USP you've got, isn't it? Which is a free next day delivery, I guess.
Yeah, I mean, that is the key differentiator between us and our peers. We actually do offer free next day delivery. Anywhere from Newcastle down to Exeter is totally is all next day delivery, ordered before 6 p.m. We also expanded our operation into Devon, Cornwall, and we've just started in Scotland as well. So we've seen some not.
Well, it certainly seems to have worked because your Trustpilot score is 4.8, which is about the highest I've seen.
It's running at 5 in the last week, but
Yeah, when we last spoke, there was a sort of like a challenge, wasn't there, to get it above 5, which is frankly impossible.
Manage that.
Yeah. Just in terms of the 19% like-for-like sales growth, how is that sort of like very broadly split between new customers and sort of existing repeat customers, just as a general sort of feel?
Well, we've got over 25% repeat customer, Paul, which is great. And that's growing. This time last year it was about 18%. It's actually over 25% now. So we're seeing a nice steady trajectory, the graph going upwards, which is what you want to see. So that's great. And the sales, particularly in the last 2 months, have been excellent. January wasn't very good for us. We struggled a bit with stock, but particularly February and March, we're seeing great exit months. Towards this coming year, which is great. Off to a great start.
And how's the sort of the marketing? Because I know when we touched base last time, you were doing a sort of some online and some offline, and bringing increasing the sort of brand awareness of the of Marks across the country to more consumers, particularly I think into the southeast.
Yeah, well, we've seen lots of organic traffic. So people going online and typing in markselectrical.co.uk rather than clicking through on your Google paid advert. So yeah, we're improving that, and that's via, you know, your TV advertising. So we're spending more on that, but we're not going overboard. We haven't got the budget to go and blow, you know, 10 million on one particular TV campaign. So we're just strategically positioning our adverts in the right areas where the right demographics are, and not throwing the money away. We carefully manage it, Josh and myself do.
And what about the sort of the cost of the sort of the cost per click stuff online? Because I know Josh was a bit worried at not worried, he'd got it all budgeted, but he did see over the competitive festive period, that sort of cost to click had sort of elevated. How's that sort of like been in that fourth quarter?
Yeah, well, it's just settled down to sort of pre-pandemic levels, Paul, as you would really expect. So it did get very expensive. Well, it was cheap during the pandemic, then it went to a peak in the last quarter, but then it's sort of leveled off to pre-pandemic levels.
Good. And what about the sort of supply chain? He did sort of like make comment, I think, that you're starting to see it ease, which is a pretty incredible sort of like, yeah.
Yeah, well, I mean, you know, when suppliers start offering discounts on product, you know, they're not doing that because they like you. It's
not even you, Mark.
Not even me, I'm afraid. They probably do it for you, I'm sure, with that.
No.
But yeah, so we can certainly see a difference, you know, when you're getting offered from not just one particular brand, but several different brands that they've got, you know, excess of stock. And there's only one reason for that, is that probably our competition aren't doing the numbers, you know, and they're probably over forecast, which is good for us. We get offered the stock at a bit of a discount, which is great.
And what about the sort of the input cost inflation on those? Because I know again before Christmas it was quite elevated, and is that, I'm just guessing that sort of like must have stabilised then. If
yeah. Well, I mean, you saw, I mean, through, you know, container pricing for from China, for example, even though we don't buy much of our stock from China. I mean, it all comes from the UK. But for the likes of Samsung and LG, the cost of a container went to sort of $20,000 a container. I think it's back down to about sort of $8,500. So it's a lot lower. So of course it lowers the pricing in the market.
And what about I mean, just on that China angle, obviously there's had some lockdowns. I think Shanghai sort of like everybody's either at home or locked in a factory. I'm not sure which, but is that sort of not come through at all yet, or isn't?
Well,
yeah.
We don't, our stock is all procured from the UK, Paul, so we don't have that problem. Most of it comes overland from Europe.
Okay.
It's only really LG and Samsung that they've got factories in Europe, obviously, but their stock's coming from China and Korea. So you do have a slight issue there, but we're not really seeing problems, you know, the likes of, for example, possibly some of our competition might with their own brand product, which is bottom end. So it makes a big difference on the selling price, of course, isn't it? You know, if you sell a cheap washing machine or a cheap American fridge freezer, and all of a sudden you've got $300 extra per unit on the price of a cheap American fridge freezer, and there's only 36 in a container, all of a sudden that lifts the selling price of your product, you know, up towards the LG Samsung levels.
I did notice, actually, I mean, you say you've managed all your costs well, because I think you said in the trading update that the EBITDA margin is roughly around about the target of 9%. So that's great. I mean, again, on the profit numbers, you're bang in line. And I think you got a good sort of nice little nest egg on the net cash at 3.9 as well at the year end. And just in terms of sort of this go forward year then, so you've had a really good, in fact, you're one of the few. You've had a really good pandemic, to be perfectly honest.
Yeah,
you've done transforming the business. You set the bar really high for the next sort of 12 months. Just sort of key sort of like things and messages that the sort of investors should look forward to for the next 12 months.
Yeah, thanks, Bob. Well, we've got such a small market share of a massive market. The market's over 7 billion when you add TV into the MDA market, major domestic appliance market. You know, we've got, 1% of that. So we've got a huge target to go after. So it's a lot easier for us. So, that's made a big difference. And yeah, we've started off April already flying. We've got, we're right out the blocks, which is great. So it's looking great for this year to come.
And have you got enough capacity to be able to service all this demand, Mark?
Yeah, we've got 46 vans currently, which is too many. So currently we with the current levels of vehicles we've got, we could do about 180 odd million.
Wow.
Yeah.
That's over double, isn't it, basically, what you're currently on?
And at this site, we reckon we could get to 250 million. So we've got such low overheads, you know, we would be the last man standing, you know, in an Armageddon position. That we've got good margin, we've got great support from our brands. You know, it's so key to have a good relationship with all your brands. You know, it's not just a one-way street. You know, you've got to help each other, haven't you, when times are tough, and that comes through when things are difficult. You know, you support them and they'll support you, which that has made a big difference.
And with the sort of the business model, just again, finally, I mean, you've got a nice little sort of like cash cushion at the moment at year end of about sort of, let's say, 3.9 mil. Yeah. Assuming this sort of, you know, virtuous flywheel, this circle of sort of like, you know, the business generating sort of like, you know, cash and growing, etc. Or, you know, what are you going to do where are you going to spend the money going forward as it generates more cash? Is it going to be continually investing growth? Is it going to be sort of like,
Well, the great thing is, because we're, you know, so cash generative, we make a good profit, is that we can invest it in marketing, more and more marketing, so we can grow. We might grow quicker. You know, we don't want to just grow too quickly and spoil our service. You know, that's what we're really aware of not doing. So, but we can grow quickly still, which, you know, there's nothing wrong with making a profit. It's a great position to be in. So we can always, you know, shrink margins slightly if we want to improve the revenue number. So it's a good position to be in, but we're not going to sacrifice profit for revenue, but we can still grow very quickly. And yeah, you're quite right, the cash will build up, but we can keep investing it. So it's a good problem to have, isn't it?
And then those sort of also those loyal customers you're building up, you know, obviously you've got new ones coming through and first time buyers. And I mean, you're going to be offering those guys sort of like, you know, loyalty discounts and bonuses going forward and stuff.
Yeah, refer a friend, you know, we start doing that shortly. Like I said, we've got Klarna. It's going to be launched middle of next week, hopefully. That's another great upside as well. We did see a big upside when we launched it, another one of the payment solution providers. So Klarna is the biggest in the market. So we look forward to seeing how well that goes. So yeah, it's all systems go. We're doing really well. Positive outlook for the coming year. Stock's not a problem. So yeah, margins are holding up and the revenue's doing exceptionally well.
Well, great. Well, I appreciate your time there, Mark. And I would say to investors, you know, there's a recent note which came out from Equity Development, which is definitely worth a read. It covers the company really well, and it does seem as though, and this would be my sort of investor take, the market, in fact, of all things online retail and retailing in general, is bifurcating between the winners and losers. And certainly it's those companies that have got the correct business model are doing very well. And those which are sort of like a lower level business models are falling down slightly. So yeah, there's a lot of delineation between the winners and losers. And if the consumer is still healthy and there's still money around, then the best place will obviously do better than the others. So anyway, well done, Mark, and look forward in touching base again with Josh at the prelims, I think on the 7th of June.
Yeah, we're looking forward to announcing our first set of results. So yeah.
Congrats then. Speak to you then.
Paul. Thanks. Bye. Indeed. Cheers.